We want to bring in RBC's lead internet analyst, Mark Mahaney, on Netflix this morning. Good to see you, Mark.
Good morning, Carl.
You like to say you're long and strong on this name. It's been trading sideways, and we see the action today. What do you put as the primary reason? Is this about content, or is this about price churn?
I think it has to be both of those. It sounds like it was more about content, not having a strong content slate in Q2. Maybe a really good question for management in hindsight is why do a price increase in the teeth of a weak content quarter? But that's looking backwards. It seems like both of those are issues. You have to think about near term. What that means is I think the market's going to be deeply skeptical of this company's ability to reach its sub numbers that's implied in their guide. About 7 million subs, new subs, paid subs in the September quarter, 9 million in the December quarter. The market's going to be skeptical on their ability to do that, especially with the Disney launch. So our guess is near term, the stock probably is dead money. I'm going to step back and make 2 points. Medium term, the revenue growth for this year is going to be the same as it was for the last 5 years. So you're going to have 6 years in a row of 35% revenue growth. And long term, we think the thesis is well intact. Obviously, streaming is where the growth is, or else you wouldn't have these other competitive launches. And Netflix will always have the scale advantage over anybody else.
For how long would you expect it to be dead money?
I think you get maybe a small relief rally on them just making the sub numbers in the September quarter, because that's still going to be printed prior to the Disney launch. And then I think the stock could still be range bound through the December quarter and possibly through the March quarter, because the concern is if we want to know what's going to happen, what's the impact of the Disney launch on the Netflix sub. So I think there's modest upside. I don't think there's a big boom move up in the stock until possibly off the March quarter results. And both of that does require them to be able to hit these sub numbers the next 2 quarters.
Mark, you mentioned being skeptical, or at least the market potentially being skeptical of their ability to hit their subscriber projections. Are you, given they didn't even face competition in this quarter, and we saw subs actually decline domestically? I just wonder what the world is really going to look like when they actually are, and when conceivably a consumer we thought had elasticity in terms of their ability to pay price, or the company did, perhaps the consumer not as quite willing to continue to watch prices go up and/or more and more of their wallet dedicated to streaming.
Look, we tempered our enthusiasm a little bit, but some of the facts that we know about for the back half of this year, what we just learned is that original content, big hits, drive subs. So what's coming in the back half of this year? The 3 most popular shows are being renewed in the back half of this year, or the relaunches are coming out. Stranger Things, Orange is the New Black, and 13 Reasons Why. That's in the English language. In the Spanish language, you have Casa de Papel, that money heist show, and Elite. Those are the 2 most popular Spanish language shows. They're out in the back half of the year. And then finally, their biggest Indian show in India, Sacred Games, is being relaunched in the second half of this year. So in terms of if content is what drives subs, content's coming in the second half of the year. This is going to be the strongest content slate they've had in a long time.